Yo, what's good, YouTube? So like the title says, I'm about to show you guys every single stock that I have in my portfolio and kind of a little bit of background on my investing strategy. So let's jump right into my computer and get it popping. Yo, what's good, guys? So welcome to the video. Right here, I'm currently on my Robinhood. See, we're already having a good day. I'm up 604 for the day. So before we get started in this, let me guys just show you my account because as you can see, obviously it says 36,000. That's what I have of my own investment inside of this Robinhood account. But if we go to investing, you can actually see I have another 25,000, in margin to add up to a total of almost $62,000. So I do have a lot of margin to use, and I want to talk to you guys about why I'm using margin, why you maybe shouldn't, and just my thoughts about it. And I'll also give you guys some insight on my investing strategies when it comes to stocks. So let's go. I'm not going to go through every single stock, but I'm going to go through about 90%. So, number one, guys. Well, first off, we need to start with my investing strategy, guys. So, first off, I'm a long-term investor, so I'm not looking for a quick in and out. Not looking for a quick pop. I'm not looking for these baby, penny stocks or whatnot. I invest in huge companies that are systematically and statistically always going to go up, and I buy at a decent price, and I just ride the wave. And when am I going to withdraw or to sell? I'm not sure, but I like having money in my stock portfolio because I can then withdraw that and use that margin or leverage against my account to either buy more stocks, crypto, or sometimes invest in real estate. So I don't mind having my money in here. I kind of use it as a bank, right? I'm not excited about the gains. I just see it. It goes. If I make money, I make money. And I think if I hold long enough, I'll probably make money on 70% of these stocks because a lot of them are huge. So start number one, guys. We have Apple. Obviously, why did I buy Apple? Because it's one of the biggest companies in the entire world. I think it's always going to go up. My average cost is 120. It hit actually 150 at one point. This is actually my second largest position. I have 9,500 in there, and I'm up 23%, and I've made $1,800 off Apple. And they give dividends, so very solid stock. I'd say this is a home run so far, and I project it to keep going up. I mean, it's Apple, so sometimes, guys, don't overthink this stuff. Apple's going to go up, maybe not fast, maybe not in a hurry, but it's going to go up, right? That's at least what I think. And if it doesn't, I'm willing to take that risk. So we're actually nearing towards $700 on the day. It's a Monday, so that's great. Tesla, number two, is actually gone crazy in the past 3 months. Up almost 70%. I was down significantly. Only have 1,000 in this, but I'm actually up 74%. So maybe I should have had more money in this. But a super dope stock. I actually have a Tesla, so of course I'm going to get the stock. I believe in the company. It's a fast moving and volatile one, so that's why I didn't invest a lot of money. Again, I'm a really conservative investor, but I did see potential in this. I still see potential, and I didn't want to just buy it because of the hype. I wanted to buy it at a good price. I bought it at 680, and it's now up to almost 1,200. So we're almost doubling. We're almost going to double our investment there. Happy to get that one Square. So this is the one I bought because I'm always going to buy stuff that is going to be towards innovation or towards the future, right? Square is an online payment processor. I'm sure you used it. I'm a business owner. I use it, and I see a projection of a lot more business owners or people working from home in the future, and they're probably going to be using stuff like Square. So I think it's one of those things you can't miss. Up 6%, which is $184, and I can project it to keep going up. So I'm happy in that one. I'm going to keep it. Palantir. I wasn't too sure about this one, but I know it is a data collection or a data integration company. Like I said, anything that has to do with innovation, data, fintech, digital banking, anything really digital, I'm going to invest in it. So again, I didn't look at the background. I didn't look at the CEO. I didn't see when it was founded. I honestly just put what I'm willing to lose in this stock, and I was willing to bet that it's going to go up over time. Again, I'm not looking at the next 3 months, 6 months, even a year. I'm looking further than that. And with a decent stock, it's almost always going to go up within that time period. So I'm almost up 10%, which is a little nice chunk there. And it had a nice little jump the other week. Just broke 700 for the day. Okay, so Peloton, I actually bought this during the pandemic. Of course, everyone was moving towards, everyone was moving towards working out at home. So I bought this during the pandemic. It actually went all the way up to freaking like 120. And I bought it at 99. So I think it actually went higher than that. Let's see. Yeah, it went up to like 156 at one point. I got it at 99, so it's really up and it just crashed. So I'm not 8% now. I'm not too worried about it. Only had 1,000 in it. So or less than 1,000. So low key, I'm not worried about it at all, but I do think it's a great stock. I'm not sure if I'm gonna really keep holding it though. I'll probably break even and dip. Opendoor. So again, innovation. This is where buying homes is moving. It's a giant multi-billion-dollar company that uses algorithms and data to see where they can buy and send 5,000 offers a day, buy and flip properties, buy and rent properties, and basically taking the digital world and digitalizing real estate. I love digital stuff and I love real estate. So perfect stock for me. This is actually my biggest holding at 9,800, just above Apple, almost at the five-figure mark, and I'm up 15%, which is $1,300. But I think that's all sweet, right? But and you can see in the past 3 months, it's gone up 63%. So just a couple of months ago, it was at $14 and I bought it at 21. So I was down almost two bands. So I'm not even up as much as I was down at one point. Again, hold long term. I could have sold it when I was down negative 2K. Now I'm up almost 2K. So again, really simple, guys. I'm not a genius. I'm not. I just buy stocks that I see potential in, and I hold. Redfin, not going to go into that one. Kind of the same thing. I have less, and they only have 7 shares. I have 400 to open. But same thing. Digitalizing real estate. APTS is actually a conglomerate that buys apartment complexes and multifamilies. Again, I believe in multifamilies and buying multiple properties at once and renting them out. It's a very solid strategy. I don't see anything crazy going on. They actually give fat dividends as well. Look at this 66, 66, 66. And if you're in the stock market, you know that getting $66, what is this, every 3 months or something like that? I mean, that is a great, that's a couple $100 a year, and that's great. And that doesn't count for obviously the growth. I have almost 5 bands in there, and I'm up 1,700, almost 60%. I got in at $8, under $8, and it's gone up to like almost 13. So getting towards that double mark again. And I'm looking in the past, and actually no, it's almost as high as it's ever been. Yeah, it's almost as high as it's ever been. Well, let's see, 5 year. No, so a long time ago, it was almost at 21. So if it goes back there, cool. If not, cool. But either way, I'm up almost 2 bands, so can't lose on that one. Let's see, Delta, SPG. I'm not gonna go into this. I actually won't. This is another home run play, actually, up a little bit over 1,000, thanks to today. I got it in at 96. It is at one almost 50 now. So that's an amazing. That's even better percentage. That's almost double what I have in Apple, percentage wise. Didn't put that much into it. This is basically a company that buys malls. I bought it during the pandemic because I thought that it was going to, recover over time, and it did, up 1,000. So you'll see my ways of picking stocks are super simple. It went down during COVID. COVID's naturally going to get better, and the stock is going to raise back up. You pretty much could not lose, guys. So trying to keep it as simple as possible. Delta Airlines, of course, is an airline. Got it pretty low during the pandemic, and now it's going back up. ARK is pretty much an ETF that invests in all the stuff that I love, pretty much the digital world. So I'm actually down 8%, but I still believe in it heavily. This is Kathy Wood's ETF. It says yeah, companies that are globally or benefit from disruptive innovation like Square, like Tesla, like EVs, like e-gaming, all the stuff that's going, VR, the stuff that's going to be changing in the future. So I got in at 136. So I got in pretty high. The highest it's ever gone is 154. So kind of down on that one, but over the next few years or really couple of months, I expect it to start flying again. Let's see. ARC F is the same thing, ETF, but for fintech, which is like digital banking, I'm pretty sure. Okay, this is actually one of my worst stocks here, guys. So I know I've been catching W's in a lot of these ones, but I'm human. I'm actually down 40% on this one. It's actually an ETF that has to do with the production, marketing, or disruption of cannabis ETF. And I'm down 40%, which is almost $3,000, guys. So that one sucks. But I expect it to go back up. I'm holding, and I'm not worried. So let's see. Oki, this is a natural gas one. I actually got this one from Twitter from Chris Johnson, just a play. I didn't even know really what it was. I just know it had to do with natural gases, right? Again, didn't do that much research. I just know that I saw, what did I get it at? I got it at 49. And at that point, I had saw that it had gone to like, actually, no. Yeah, what? Yeah, I got it. Maybe it's a 5 year thing. Okay, yeah, I saw that it had gone up to $76, so I thought $50 is a steal. I bought it. I'm up almost $2,000. Might hit 2K today. And the dividends, this is actually my highest dividend as well, guys. Look at this, 126, 126. So several hundreds of dollars every single year just for holding this stock. And what I do, if you stayed this long, here's the real hack, right? So I'm using 20 something thousand in margin. The reason why I'm doing that much is because I'm investing on stocks that I'm all in on. I don't think I'm going to lose on Apple. I don't think I'm going to lose on Tesla. I don't think I'm going to lose on what's another one that I'm heavy in. I don't think I'm going to lose on ARK. So I invest in not only ones that I think that I can't lose long term, but I invest in ones that give me a dividend return that is more than I pay for the money, which is 2%, 2% a year. So let's say I pay uh, $400 a month, a year for margin. Let's say I get 1,000 back in dividends, or let's say maybe even 600. That pays for it, and that doesn't count the growth. So that's pretty much the hack, guys. Let's say I my dividends give me 5% a year, but I pay 2% a year. It's free, guys. It's basically free money. If you're doing that and investing in like options, yeah, I think that's kind of sketch. But the way I'm doing it, I think it's basically free money. I'm going to use that. But if you're a beginner, I maybe stray away from it. But as you can see, all time I just became up. I'm like 3,400, so nothing crazy, but it's just like a bank account. I'm up 10% of my money in a couple of months, so cannot complain. Okay. So now subs is basically an ETF for like streaming services. I'm down on that one. Kind of sucks. E-gaming, AESE is the e-gaming one. Again, disruptive innovation. I think it's gonna e-gaming is gonna just like VR is going to increase and become a bigger platform and sector in the future. So I'm all in on that. It's up 6% today, but I am down on that one. HYLN, actually, this is one of my worst stocks as well. Down 1,400, over 56%. This was an EV or electric vehicle. Uh, Electric vehicles, it has to do with batteries for EVs for trucks. I still think long term it can be great. I'm not too sure about the company, but I'm down 56%. I'm going to hold it out. If I lose on that one, I lose. But you do have some that just bring you down, but you are going to have ones like I showed you that are going to bring your account up as well. That's why it's good to diversify, guys. TDoc is kind of like digital health sector stuff. I think I'm down on this one as well. Let's see, down 17%, which is almost only $100. Only had 500 in there. Didn't really believe in it. And lastly, I have some cryptos as well, Doge and Bitcoin. And then Coinbase, which I bought at an IPO price, which is a terrible idea. I'm down 10%, not too bad, but definitely bought this one kind of off hype. Only put 500 in, so I'm not too mad about it. And yes, guys, those are all my stocks. This is my $60,000 stock portfolio. I only have 36 in my own bread, and I'm using 25K margin. Right now, I'm at around $1,100 to $1,200 per year in dividends, which is a pretty decent start. And we're just going to keep reinvesting during dips and keep pushing. Right now, I'm kind of moving more towards feeding my crypto portfolio, which is a little bit smaller than this one, but still kind of substantial. So if you guys want to see a video on my entire crypto portfolio, I'm not sure if I'm going to make that 100%, but if you guys are interested in it, I'll show you guys that as well, because I think that can blow way faster than stocks. So appreciate you guys watching the video. If you have any questions about anything, leave a comment down below, and Dooley out. See you guys in the next video.